How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 within my Vanguard brokerage account. Now, I'm incredibly excited today because it is the beginning of a new month. Welcome to February. However, what that ultimately means is I get to go over all of my dividend income that I've received throughout the entire month of January. And while I've only received 6 dividend paychecks throughout the month of January, I have to say we are right on the money in terms of rolling this dividend snowball, and I get to share that journey with all of you to prove to you that yes, dividend growth investing just works.
Cha-ching, cha-ching, cha-ching-gery. Money, oh money, how I love thee. From pennies to dollars, any amount will do.
In today's video, we're gonna go over all 6 dividend paychecks. And as for my account update and sharing this journey with you all, we are back up by $2,541.60 on the day after tech stocks delivered through on rock solid earnings, delivering through a lot of momentum across composites, leaving my account sitting at $87,243.82 on the day. Now YouTube, before we dive in, tap on that thumbs up button and help me grow this channel. If you haven't done so already, go ahead and make your way to subscribing to the channel. I'd love for each and every one of you to be on this journey with me. Now let's go ahead and dive right in. So where were we? Oh, right, the dividend income I received throughout the month of January. Now, before I actually get going, I want to share with you all that I'm going to be breaking down company to company what they're all about, where they currently stand, and where they are heading, because not all of these companies I'm actually particularly excited about and will be doubling down on. I want to share my thoughts with you on those companies in case you want to follow suit in what exactly I'm doing. But if not, always just make sure you're doing your own investment research to make sure that each and every move you make is great for your own personal portfolio. Your goals as well as my goals are probably not the same. So with that being said, let's go ahead and go back to January 3rd, where I received my very first dividend paycheck. It came in from PPL Corporation, ticker symbol PPL. Now, PPL Corporation was founded back in 1920. It is an American energy company that has honestly just become a powerhouse of a player within the industry, establishing itself as one of America's largest utility companies, serving over 2.5 million customers, whether those are individual households or businesses. Now, with an incredibly rich history and a plan to become a renewable energy grid leader, PPL Corporation is certainly here to stay, and it makes me incredibly confident just to continue to hold my money with PPL Corporation. As long as all of you are paying your utility bills, I'm certainly receiving those dividend paychecks from a company like PPL Corporation. Now, my honest thoughts are that I do foresee growth within PPL Corporation. However, there perhaps may be a better play on the horizon in which I'm actually going to sell out of PPL Corporation and move into a play like Southern Company, where I see a lot more growth in terms of their stock share price, something that I'm thinking about right now and wanted to update you all on. However, as of right now, I hold 5 total shares of PPL Corporation. And for those 5 total shares with a dividend yield at 5.59%, PPL Corporation went ahead to send me a dividend paycheck for $2.11. Now, jumping to the 11th of the month, we had a dividend paycheck come in from Omnicom, ticker symbol OMC. Omnicom was founded back in 1986. It is an American global media, marketing, and communications company that since its founding has just become a force not to be reckoned with. I'm talking about a company that has made a global footprint spanning over 100 countries, and moreover with over 5,000 clients, some of the biggest names out there from Apple, McDonald's, Johnson & Johnson, Pfizer, Nissan, ExxonMobil. I mean, you name it, it is most likely underneath the marketing and advertising belt of Omnicom. Now, when going back in Omnicom's stock share price history, we see this massive hit in 2020. Of course, all companies across the board were hit, but particularly marketing and advertising companies, because one of the first budgets to always go is, of course, that marketing spend budget. So I went ahead and picking up shares of Omnicom, knowing full well this company was not only going to rebound, but most likely do phenomenally well post-pandemic, as all companies are going to once again need the lifeblood of new clients and picking up and retaining old clients. That's all done through the art of marketing and advertising. So now here I am with 10 total shares worth of Omnicom in my portfolio, and with their dividend yield sitting at 3.75%, Omnicom went ahead and sent me a dividend paycheck for $7.07. Now, the even better news on the table for all of us to digest is the very fact that analysts foresee Omnicom taking right back off to some of those record highs and even then some, coming in at a median stock share price at $85 per share and a high stock share price at $96 per share. It's just an incredibly rock solid dividend company to have within your portfolio. Moving to our third dividend paycheck of the month, we received it from everybody's favorite monthly paying dividend company. It is also a dividend aristocrat. This company is Realty Income, ticker symbol O. Now, Realty Income is a real estate investment trust. It was founded back in 1969, established itself as a net lease solutions leader within the REIT game. A net lease solutions is essentially when a company leases out a property and then that tenant is responsible for literally everything under the sun when it comes to that particular property. So a very profitable game for Realty Income. Now, such a business model truly allowed Realty Income to amass an incredibly sizable portfolio, now sitting at over 11,000 properties spanning across the United States. They've also expanded into the United Kingdom, Puerto Rico, and more recently, well into Spain. They're only going to continue to grow, which allows analysts to remain incredibly excited when it comes to Realty Income. Coming in at a median stock share price at $79 per share and a high stock share price at $87 per share, both of which are up from their current stock share price sitting at $69 per share, so room there for growth. In regards to my personal portfolio count, I hold 75 total shares worth of Realty Income. It is one of the largest positions in my portfolio. They're coming in at a dividend yield of 4.35%, which allowed them to send me a dividend paycheck for $18.33. Now, again, as a dividend aristocrat, they've been paying those dividends out for 26 consecutive years, increasing that dividend year over year, which continues to give me confidence to only add to my position and growing it to at least a share count of 100 total shares worth of Realty Income. Later that day, I went ahead to receive a second dividend paycheck. This one came in from what I'd like to say is a very silent leader within the healthcare industry. We're talking about Medtronic, ticker symbol MDT. Now, Medtronic is a medical technology company that focuses on, of course, medical technology, services, and solutions. It's been silently leading the industry since 1949. And I say silently because, to be quite honest, I don't hear a whole lot of dividend investors or value investors actually talking about such a powerhouse opportunity like Medtronic. We're talking about a company that since its founding has now generated market capitalization of $138 billion. Now, more recently, in taking a look at their stock share price, we can see that over the last 3 to 6 months, it's actually been pretty beaten down, and that is simply because we've had COVID cases spike, which has delayed elective surgeries, on top of labor shortages, supply chain disruption issues, and last but not least, a bit of negative press came out involving the FDA in one of Medtronic's facilities, heavily impacting Medtronic's stock share price, and therefore we see that it fell from around $135 per share down to a low of around $100 per share. That's about a 24% opportunity to scoop up Medtronic while it is on sale. Now, just looking into Medtronic's future, of course, we see this stock rebounding. Analysts agree, as it's coming in at a median stock share price of $128 per share and a high stock share price of $153 per share. As we speak, I currently hold 20 total shares of Medtronic with their current dividend yield sitting at 2.44%. They sent me a dividend paycheck for $10.78. Now, in terms of that reliability, we're talking about a company that is also a dividend aristocrat here with 43 consecutive years of dividend payments and increases along the way that I'm only foreseeing making its way into the elite category of a dividend king. And finally, as for the last two dividend paychecks that I received in January, both of which came in from REITs, those real estate investment trusts, and both of which I spoke about in my last video. I'm going to go ahead and throw that link above. If you want to go ahead and check it out, I talk about 5 high quality REITs you can get invested into right now that are the perfect hedges against inflation. However, let's dive into these two. The first of which is coming in from Store Capital, ticker symbol STOR. Now, Store Capital was founded back in 2011. They've been highly focused on the mid-market net lease solutions game, and since their founding, they've actually amassed a nice portfolio of over 2,500 properties and have also attracted Mr. Warren Buffett himself into investing into Store Capital, which should certainly deliver through on a ton of confidence for you as an investor. If it's good enough for him, heck, it's good enough for me. Now, when it comes to Warren Buffett's 9% stake, he decided to move forward on a deal with Store Capital and getting invested into it because of their business model. Now, their business model calls for leasing out properties to service-oriented companies, so restaurants, educational centers, as well as fitness facilities. On top of that, they are highly focused on investing in manufacturing facilities, and last but not least, big box retail centers, all of which, regardless of the state of the economy, do exceptionally well. Now, I really only began a position with Store Capital rather recently, so right now I only hold 5 total shares worth of Store Capital. However, with their dividend yield sitting at 5.08%, they sent me a dividend paycheck for $1.95. And last but not least, we have Stag Industrial, ticker symbol STAG. Stag Industrial is another young REIT, yet a massive powerhouse play. I have been doubling down on Stag Industrial with this last bout of volatility in the stock market, picking up a ton of shares. It's myopically focused on single tenant industrial properties. We're talking about warehouses and distribution centers, with 40% of their portfolio engaged in e-commerce fulfillment. Now, that is exciting because e-commerce is the way of the future. Since their founding, they've amassed a portfolio of 517 properties spanning across the United States. Some of their biggest clients are Amazon as well as FedEx. Now, analysts are certainly looking forward to Stag Industrial's future, coming in at a median stock share price of $48 per share and a high stock share price at $55 per share, so certainly room for growth. Now, unfortunately, I did miss that ex-dividend date, so I was unable to capitalize on all the new shares that I added to my portfolio. However, right now we're sitting at 20 total shares. Now, missing on that ex-dividend date only allowed for me to collect a dividend paycheck from Stag Industrial for $1.22 on a dividend yield that's currently sitting at 3.56%. Now, YouTube, that is it in terms of all of the dividend paychecks I've received, but now for the moment you have all been waiting for, or at least I have, the big dividend reveal. So make some noise, put your hands together. This past month of January, we brought in $41.46 for doing absolutely nothing. And just jumping right over to our dividend tracker, we can see that last year we only brought in $21.47. Now, this is all the power of dividend growth investing. You could see this dividend snowball is rolling as we go. This is how simple dividend growth investing is. This is how simple wealth generation is. Now, if you like what you heard, you learned something new, drop those comments below. I'd certainly love to read through your thoughts on the companies, the dividend paychecks I've received, or perhaps some of the highest paying dividend stocks in your portfolio, your big dividend reveal. And before we close out, tap on that thumbs up button and help me grow this channel. And of course, if you have not already subscribed to the Blue Lion Finance channel, make your way over to doing so. I'd love for each and every one of you to be on this ride with me. Now, YouTube, until the next video, I will see you all there.